Hi, everybody. Welcome to another Funded Trader interview. Today, we've got Allan. He's joining us and he's going to bring us through his experiences in trading, how he found Funder Pro, and how his trading is going now, and everything in between. Thanks so much
Awesome.
today for joining, Allan.
Thanks. Thanks, Eric. Appreciate it.
Yeah, so
So
maybe,
I
yeah,
guess I'll let you start.
yeah, tell us a little bit about yourself.
All right. So I got into trading about 5 years ago, exactly. So around the time that I came to Atlanta, I recently moved here at that time from New York. So I'm from New York City, originally born and raised. Um, I've been interested in the market since around 2008, right around the whole market crash. I was coming out of college at that time, fresh into the market, well,
Hmm.
job market, I should say. And I realized there were no jobs, no one was hiring, everything was just like total chaos. And all I kept hearing about is just like market crash, the Dow Jones, this, that, and that. And at the time, I was wondering like, how do I get involved with this? Because it was so like exciting for me, just seeing it on the news every day, charts going up and down. And I was like, this is pretty exciting. And so as I started to research and look a little bit into it, I realized here in America, to trade stocks, they have the pattern day rule, which means that you can only day trade if you have at least 25K in your account. So at the time, I was maybe 18 years old. No way I would be able to get that kind of funding. So I always told myself, it's been a passion of mine. I'll try to get the education, and at some point, I'll be able to get there. And then years later, went into a different field, doing some different things. I was in business sales, B2B sales, and I'm a project manager now by trade.
Uh-huh.
But on that journey, I came into the Forex space. I had some friends that were in different MLM groups, and you probably heard stories with that. But to me, at first, I just was like, oh, this thing sounds like a scam. It sounds like a scam. So I kind of stayed away from it. But then I told myself, I was like, it seems like if I do go this Forex route, it's a way that I can enter the market and, be able to trade with a smaller capital versus like having to have this 25K thing. So I said, let me entertain it. Worst case scenario, I'm not interested in doing any kind of multi-marketing, but there is an
Hmm.
education piece behind it. And so I can essentially uh, get the education that I could and then start my journey from there. So that's kind of how it happened. Around 2019, I joined an MLM group. It was probably for about a month or two. And then immediately I was turned off by all the sales stuff. But I will say it helped me because it introduced me to that trading niche, on social media and what have you. And I was
Hmm.
able to find some mentors and kind of start my journey from there. So that's kind of how I got into it.
Yeah, nice. And so I guess then, in that 2019, you started trading. Maybe you could tell us about the first, let's say, first few months or first year of your trading. How did it go? And I guess what were the struggles that you had and what did you learn along the way?
So, it's kind of funny. I actually, this past weekend, I found my first trading account that I ever opened with the broker that I was using at the time. And I started actually live trading the week before COVID happened. So I think I opened the account January 30th or something like that. And whenever it was that they announced that COVID was hitting the US or what have you, and the Dow just started doing that massive fall, is when I actually happened to start live trading. So I got really lucky. I guess it was beginner's luck. I took like a 5K account to like 11K or something. I withdrew 6,700 and kind of built from there. And the
Yeah.
funny thing was in the beginning of trading, I really didn't take much losses for some reason. I was either making profit or staying break even, majority break even,
Hmm.
which is kind of unique because I didn't know what I was doing, if I'm just
Yeah.
being completely honest. But what happened was at that time, my risk management was perfectly intact. So I was able to, if I didn't like a trade or if I didn't like a setup or what have you, stay away. If I didn't like one, I wouldn't over leverage at that time. And then over the years, it actually got terrible. So I went through this phase of having terrible risk management. And a lot of that had to do with having funding programs because at this point, I'm no longer using my capital. I'm using someone else's capital and it's a bigger capital. So you think you could just get reckless. And I went through this whole phase of like blowing accounts and then eventually finding my profitability, but through funding capital. So that's how that is.
Okay. Uh, yeah, yeah, yeah. And I guess, what what then got you to make that switch in those funded accounts? Because obviously, yeah, as you say, going from your own capital to funded accounts, and I, can feel like you don't really have skin in the game or as much skin in the game. What got you to shift that mindset on those funded accounts to say, okay, I need to start protecting that capital?
Okay, so I don't want to say what companies I was with. I don't mind. I don't know if it's a thing for you guys if you want me to, if you allow me to say what brands, but I started with probably the main brand that was around in 2019. Great experience with them, no issues whatsoever. And at first I was respecting the capital, right? And then I think I passed. It's funny because I have these like monumental moments of when things happen during trading. So I passed my very first funded account right when the last election happened. So when actually not the previous one, when no, it was actually, yeah. So when Biden got appointed as the president, and when that happened, I remember I got my live account and I was thinking, the markets love Trump. They're not going to like Biden. So we were at all-time highs on US 30. Let's sell this thing. And the market kept pushing up and I kept selling it. And I realized, like, I think I'm just doing this based off of emotion rather than overall structure. And so I lost that account, needless to say, in like 2 days. But that started a big like shift from going from respecting capital to not respecting it. And I went through this period. Obviously, that was 2020. So from 2020 to about 2022 or 2023, I was passing challenges like no tomorrow, and then just blowing and like not being able to actually, extract capital from it. And I started thinking to myself, I was like, there has to be a reason why I'm doing this. It's not that you don't know what you're doing. I think it's just this over leverage thing. But I went through this cycle. I just couldn't get myself out of it. And what I did was at the end of 2022, after spending thousands of dollars on challenges, I took a break. And when I took that break, I spent maybe about 2 or 3 months just glancing at the charts, but not live trading, and doing some self-reflecting and thinking about, like, if you want this to be a career, there's no way you can just wake up and throw 10, 20 lots at a trade. And if you lose it, jump right back in and revenge trade. Like, you have to treat this like a business. And so after having that conversation with myself is when everything changed for me. So I came back sometime in the beginning of 2023. And from there, I had a set amount of risks that I wanted to risk per trade. I had a set amount of trades I was interested in taking per day. I had one particular pair that I wanted to trade. I picked the session that I wanted to trade. And I had a particular strategy in how I wanted to enter and exit the market. And I took all of those things in my time off to figure out. And from there, it's been up from there. So I've had, different platforms. But from that point, now I've been able to like extract money from the market. And once you kind of start that level, it's like you just kind of like continue from that path. So that's how it was. The other thing too that I want to mention is prior to when I was losing a lot, I was doing an account size that I think psychologically was too big. And so I also brought it back. So I was doing a lot of 200K accounts because, most companies, that's probably the highest capital available for one account. And but I didn't need that. I realized psychologically $100,000 account, while it's less capital, it's easier numbers. It's easier to remember your drawdown. It's easier to remember the lot sizes you want to use because you're at 100, just add a few zeros on it. And so I think that to me also was a huge game changer because while percentage is percentage, whether you're doing 8% on a 100K account or 8% on 200K account, I think from a psychological perspective, that was better for me. That shifted things as well.
Yeah. Okay, that's good. Yeah, it's interesting, and I've heard a few people say, finding that optimal size account. I've heard some people as well saying a 50K account is for them, because I think once and talking to some other traders as well, it's like detaching from the money, seeing such big values. Of course, it's a lot of money, and so having that kind of psychological distance from big numbers can help. I guess, how do you now, I guess you've gone through an evolution in your trading as well. How do you look at the numbers and maybe, not get too emotional about the financial element of it.
You know what's funny? So what I did was because that was an issue for me as well. And what I did was I turned my candles to one color. I had a white chart with black candles. I don't have it anymore because, that was a different time ago, but that's what helped me get through that phase because I realized that the green and red standard candles, in my opinion, are a psychological thing, right? It could be good or it could be damaging. I find that it's really damaging. Let's say, for example, you're in buys and you're seeing green, and all of a sudden you see red. You start to associate red with negativity, whether it's like a stop sign or whether it's like a red light or whatever. It's just a caution thing. And I think a lot of times when we see that, we get so nervous, but not realizing the market just doesn't move up or down. It moves kind of like in waves, right? And so you got to anticipate pullbacks in order to get price to push in your direction. So that helped me a lot. In addition, at the time, I was trading on MetaTrader, and a lot of times I would trade mobile. And what I did was I would enter the trade and either just go back to TradingView and manage the trade from TradingView. So I'm not looking at the money, or I would completely not look at the screen that shows the money and I'm just looking at the candles. Because at the end of the day, right, pips equal some sort of monetary value. But the point isn't to get the monetary value. That's the after effect. The point is you want to get a certain amount of pips. So as you're seeing the market's moving up or moving down, whether it's for you or against you, if you do the math, you already know that you're either winning money or losing money.
Yeah.
But believe it or not, those little things really, really help. And it was able to help me like a lot. So that's probably a little tidbit I could share with someone if you're going through that similar situation.
Yeah. Yeah. Nice. And so I guess now that you've achieved a certain level of consistency in your trading, I guess what are the goals? What are you looking at now for the next year or a couple of years in your trading that you're trying to work on and continue with?
So that's a really good question. I'm actually going through some changes right now. So currently I work a full-time job, but I'm actually leaving my job and going to go into full-time trading over the next 2 weeks. So my last day working is September 13th. And so with that being said, I got to really take this thing seriously.
Yeah,
Really can't be playing. But I just feel like it's time. Like I've worked at my company since 2010. So right after that whole market crash that originally got me into folding. I've been there. I've worked my way up to different departments and different roles. And I kind of feel that I've reached my pinnacle. And so my next passion is this. In fact, this is my passion, but I just felt like I was giving all of my time to someone else and I needed to bet on myself. Now, it could go really bad, right? Or it can go really great. Obviously, I'm optimistic, but I just feel like it's time to bet on myself. So I've been spending some time saving up a nice little cushion, about a year or two worth of reserves, so just I can really focus on this thing and treat it like a business, so to speak. So that's a huge change in my life, obviously. I have bills like everyone else and responsibilities and a new son who's a year old. So
wow.
It's risky, but I just think it's that time for me to bet on myself.
Yeah, incredible. And I think, it's great that you've got the buffer in place. A lot of people, what I hear, is having that cushion there allows you to say, okay, I'm not trading to pay my bills. I'm you've got the money there to continue your bills and it's going to deal with that. And now you're just focused on your trading rather than actually trying to eat, which I think is a great idea. And I guess it's going to give you a lot of mental space to deal with that. So I think that's really cool.
Yeah, that was kind of the whole mindset behind it. It was like, of course, everyone wants to leave their job and go full-time trading and buy a Ferrari tomorrow, but like that's not really realistic, right? Like realistic is this thing kind of happens in stages. So you start out not knowing anything about it. It's kind of like learning a new language. And then finally you kind of start learning the new language, but then you go through those ebbs and flows of trying to apply the data that you bring into your mind onto the charts. And then of course you're going to see some terrible consistency there. And then one day when you're not expecting it, and that's kind of what happened to me, like one day when I was least expecting it, it kind of just clicked. It's like, okay, now I understand how to trade. But then the next hump is the psychology piece that a lot of people don't talk about. And then I still struggle with psychology. I won't pretend like I don't. I think I probably will for the end of time, right? But I think as you practice and you get more used to it and you tell yourself to treat it like a business rather than just like a gambling experience, I think that is really what shifts it from just people saying that's a scam or this and that versus to like, no, this is a business and this is how I make, a living for myself. So, yeah.
Mm, that's amazing. Yeah. And I guess so, like to understand, like, and I think you said it perfectly there, it's like, okay, people in their mind have it that, oh, I'm going to become a trader and get a Ferrari and, live that lifestyle. But I
Yeah.
guess, the reality for, I guess for you and a lot of people is, it's just a way of actually creating a good life, a reasonable life. Like, I guess what in your mind, what is success going to look like? Like what's that kind of number that it's going to be like, okay, this is successful and it's replaced my job and this now is my job and it's a successful earning.
You know, um, I think before I tried to put a number on it, and I don't think I want to put a number on it, but I think it's more about a way of living, right?
Okay, nice.
Because let's just say I'm making $1 million a year. At some point, that's not going to feel like success, and then it's like I have to break that new barrier. But I think for me, what's more important is some level of freedom, right? Because when you're working a job, you're trading your time for wages, right? And so if you think about what trading does for me, if you're looking at, I typically come to the market at New York Stock Exchange open, and I'm usually out of the market within an hour. That means I have roughly 23 hours of freedom, right? So I don't want, I'm more so, I want to be able to continue that level of freedom without having to worry about finances. And I think for me, success looks like being able to maintain that because we have good quarters and bad quarters, but are you able to sustain that over a year, right? Then are you able to sustain that over 5 years and 10 years? And as you're
Mm.
doing that, like, are you growing in that experience? Are you doing one lot today and maybe scaling up next year to do 5 lots and maybe 2, 3 years from there doing 10 lots? Like that to me is what defines success, growing in the field, but also maintaining and elevating from a financial perspective. But previously, when I put a dollar amount on it, I think it gave me this unrealistic goal or unrealistic, I would say, definition of success, which kind of hindered me. I feel like in the process.
Yeah.
But of course, long story short, millions, of course. But yeah, this specific number on it.
Yeah. Yeah, no, well, I think and I think you summarized it well. It's a really great way of thinking about it that it's, because like what is money for except for, you know, helping you live the life that you want to live. And otherwise it's just, it's money in the bank and it's kind of ego. And
Yeah.
so having the focus actually on the lifestyle and the life that it gives you, I think is a really great way to see it. And I think that's a really nice way to look at it.
Yeah, and then I mean, one way I do look at it is like, okay, let's say if I'm making X amount of salary for my job, okay, has trading replaced that salary? Okay, so that's one baseline, and then
Yeah.
maybe a year or two from later, how about at least 2x that salary or so? Okay, so that's success, and maybe continuously building from there. Is our ways to look at it, but I'm also realistic of realizing that like I see a lot of traders they'll say like I make 10,000 a month or 20,000 a month, and I'm like maybe you can, but it's really hard to repeat the same percentage every month. And it's like if you're trying to aim to make that percentage every month, it could be a little realistic because there's down months, right? Like especially during the summertime, volume is usually pretty slow. I think we got a fiery summer this year, which I don't think I've seen in my 5 years of trading. But
Yeah.
outside of that, yeah, it's usually pretty slow. And then obviously around the holidays, it gets a little slow, and then it picks up in the beginning of the year. So, you're gonna have your down months, you're gonna have your flat months, and you're gonna have your profitable ones. But I guess like, what does that look like at the end of the year? Is probably more of how we should probably be looking at it, or at least quarter to quarter.
Yeah. Yeah. No, that's great. Yeah, so I guess, there'll be a lot of people watching here today who will, maybe be at the start of their journey. And so
Mhm.
obviously it's fantastic to see you're at this pivotal point now. And there's so many traders who have that as an ambition to say, okay,
Yeah.
I want to make this my full time. So I guess what would you say to that person now that's beginning the journey? that's starting and trying to say, okay, in 5 years, I want to make this my full time?
Uh, I'd say number one, look for good education. There's a lot of free resources out there. Obviously, you have things like Baby Pips and YouTube, and there's some mentors that get free value. Um, I think there's a few things you have to think about. You have to think about what does your particular lifestyle look like today, right? So, do you work a day job? Do you work a night job? That depends on when you're going to be able to trade, right? You have to think about yourself as an individual. What are your personality type? Like for me, I don't I don't hold my trades over session. I don't like to be in trades over an hour until it gives me anxiety. So am
Mm-hmm.
I going to be looking for, you know, moves on the 12 hour or the daily? Probably not, right? So you have to kind of get an understanding of who you are in the beginning and also
Mm-hmm.
what are your circumstances. So if my circumstances, I only make a certain amount of money that can afford maybe like a 5K account or something like that, then do that. Like don't over leverage yourself and get a bigger account that you know you can't afford because when you have those fluctuations in your P&L, it's going to be a lot more stress on you than you can necessarily handle.
Mm-hmm.
Outside of that, you got to learn which pair you're looking to trade, and if so, my biggest thing that I would recommend is to stick to one or two pairs. I think if you're trying to trade multiple pairs, even if it's in the same category, like if you trade metals, just look at gold. Don't look at gold and silver. If you trade indices, don't look at NAS and US 30 because even though they may run concurrent, a lot of times they may not, and those things will confuse you. I always like to make that comparison when you're choosing a pair. It's kind of like choosing a partner. If you have multiple partners, you can't remember everything about each partner, right? Can't remember their favorite color, what's their mom's name, what's their dog's name. But if you have one partner, you can learn everything about that particular partner. And so a lot of times when you're trading, even if you have a strategy or if you have something going on, sometimes it's about gut feeling because you've seen this pattern happen so many times. You can see it developing as it's happening. You can't
Mm-hmm.
figure that out if you're all over the place choosing every pair. And then on top of that, if you're choosing one pair and you're trading it in three different sessions, well, they might act very differently in those different sessions, right?
Mm-hmm.
So once you get those things kind of figured out and you choose a mentor, you're probably going to have to go through multiple mentorships. You're probably going to have to pay for courses and things of that nature. I've spent thousands on courses, but the way that I looked at it was if it's going to take me on average 3 to 4 years to kind of learn this thing, and it's almost like going to college, right? Like you pay for an education, but a lot of times we leave college and we feel like we learned nothing and we're in debt. At least with this, if you learn something and apply yourself in 4 years, you might have spent a lot of money, whether it's blown accounts, blown prop accounts, or what you spend in courses. But in the end, once you learn that knowledge, no one can ever take that away from you, right?
Easy.
And that money will pay for itself back tenfold. And then from there, I would say demo. That's probably the biggest mistake that I didn't do. I pretty much went live, as I told you, from the very beginning.
Yeah.
And it cost me a lot. It cost me quite a lot, especially when I was going through that over leverage phase. I don't even want to tell you the number of how much money I lost. But I do think my learning curve would have been much, much smaller had I actually demoed because and then when I say demo, don't just open an account and pop open some lots. Like treat it. So for example, if your goal is to obtain $100,000 prop account, on the most standard prop firms, it's a 5% daily drawdown and a 10% overall.
Yeah.
So if you're going to demo, you need to treat it the exact same way that you would treat the prop account. It's almost like dressing for the job that you want. So if you want to be funded, demo the exact same way. If you know that you need to get 8%, then you don't need to do a 50 line and try to get 50% to make a screenshot and show your friends because at the end of the day, that's not putting money in your pocket. This is the learning phase. So
Yeah.
spend that time demoing and treat it the exact same way that you would do the live markets. And I think that will cut your learning curve in half, maybe if not more or a little less, but give or take. And then from there, you just get that click one day where it's like, damn, I think I got this and go from there.
Yeah. Amazing. Yeah. Okay. So I guess, do you have any questions for me?
I have a few questions. Yeah. So I was thinking, and I've been through multiple prop companies. A lot of them give me anxiety, I'll be honest, because the prop model, right? It's like, say that you're booking customers, and in the end, you're really just paying customers with sign up money from other companies. I came across Funder Pro a ways back. And at first I said, I'm not doing them because 45% consistency rule. I don't want to deal with that, right? But then it got me to thinking. I was like, wait a minute. There has to be a reason why they're making it so much harder in the beginning, because I understand that if you are going live or with the live capital, or if you are backing customers with live capital, you can't make it as easy because that model is not going to work. If you just let anybody pop 10
Yeah.
trades and then they get funded right away, the accounts are going to be blown. The math isn't going to make any sense. And I started thinking to myself, because I can pass challenges pretty easily. Obviously, a lot of times that's over leveraging, but I thought about that from a um, sustainability perspective, that's probably not good for me in the long term. So that's the reason what brought me to Funder Pro
Mm-hmm.
months later. It's like I seen it in the beginning. I was like, no, that's not for me. It takes too long to pass. I want to pass right away and start trading. And now I'd rather spend my time actually going through the challenge phase, because I feel like if I could pass your challenge, I could do anything.
Yeah.
With that being said, what kind of confuses me a bit is when we are getting a live account, is
Mm-hmm.
that live money is that live account actually have a live $100,000 in it, and then you're copying it to an account that has a bigger pool, or is that just essentially a live server demo money, but it's copying to a live pool of money that you guys have, like a large account?
Yeah. Yeah. So, yeah, effectively how it is. So putting 100,000 into every account would kind of be inefficient for
Yeah,
managing the capital. And so,
yeah.
yeah, we do have a centralized trading account.
Hmm.
And so effectively those trades are copied into the centralized and then sent to the broker for execution.
Okay. Okay.
Um, and so, yeah, like we manage the funds in that centralized account, but every
Mhm.
trade does still go to the market. And obviously then a loss means a loss in the market, a profit is a profit on the market.
Yeah.
Um, but yeah, we do it through that centralized account because, a couple of things. If you have 100K, you don't use all of it at any one
Mhm.
point in time. If you hit drawdown, obviously we'd have to take the money out. And likewise, if you made profit, we'd have to take the money out. And
Yeah.
so it gets a little bit messy. So the most convenient way is to do it through that centralized account.
So I guess like what I'm saying though is like the account that I actually received, is that like a real 100,000 in it, or is that just like, I guess, effectively a demo 100 that's copying to a live 100?
So the way, yeah, look, I guess, okay, to explain it the most effectively,
Yeah.
in theory, it is simulated
Okay.
to a point, but the price. So when you press buy or sell,
Hmm. Hmm.
the price feed that you get executed, it effectively says, okay, I want to buy, and then it
Okay.
goes to the centralized account, and the centralized account goes, he wants to buy, and then
Okay.
you get a price fill, which then comes back and then comes back to your account.
Got it. Okay. Okay.
So
Okay. I
so
got it.
in theory, it's kind of simulated to a point, but actually the price fills that you get are what happens on the market.
No, I can tell, because I can tell the difference between the executions on the demo account and the executions on the
Yeah.
live server. And I did actually want to ask you guys. So around the time that I signed up, which was maybe 2 months ago or so, I forget exactly. There was some really, really bad slippage on Trade Locker, but I don't experience that anymore. Is that something that you guys like corrected with them, or?
Yeah, so it's basically we worked with our broker and the liquidity providers to get better pricing.
Okay.
So yeah, it's just something that we've worked on to try and get the best execution. Because obviously, if we can get better execution, then our traders can do better and we'll maintain more of the funds. Yeah. So yeah,
Yeah.
again, we are working to try and improve it even more than it is
Mhm.
now. Um, but yeah, there's also kind of a limit to how far it can go because at the
Of
end of
course.
the day, it's the real market. And
Right.
so,
Right.
obviously it can't be artificially too tight.
Yeah. And so I know that you guys have other props that are white label under your brand or what have you. So if I do get max allocation with Funder, is it okay to get max allocation with those white labels, or is it kind of like a one or the other? So,
Uh, yeah, no, those other companies just use our technology, and as
okay.
such, you're able to use those and get their max allocation too. Yeah.
Because I know
Um,
that sometimes I'll see it says like you're really entering agreement with Funder Pro, and I go on their website. So I just want to make sure it doesn't affect.
yeah, yeah. So yeah, with that, um, we were running that model, and
Mhm.
it's just kind of turning out that it's better if the companies run on their own from
Okay.
a management and a profitability perspective for them. And so we did try that. It was working pretty well, but I think them running on their own made more sense. So yeah,
Okay.
we're moving
Okay.
away from that.
Okay. Cool. 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 Do you see like any changes in the model of how you guys do the challenges today, like coming in the future, or is this kind of like the model that you think is going to be there for the long term?
Yeah, look, I think the industry has fallen on this model,
Yeah.
and it hasn't changed much other than like, oh yeah, now there's a one phase, now there's a three phase, but it's kind of the same thing. The way that I see it, you know, I do believe that different account types are going to be here in the future, a way
Okay.
that we can um, a way that we can evaluate traders more effectively as well, because not every trader trades the same way. And so a two-phase challenge or a one-phase challenge doesn't suit everybody.
Yeah.
Some people are just much more longer-term traders. And to even think about it, and back to what you were saying a few minutes ago, 10,000 a month is quite a big number. But
Yeah.
if you're on a 100K account, that's 10,000. So, not everybody is making such big profits.
Yeah.
Some
Yeah.
people are just slow and steady traders, and they're making little profits. And so I think over time, it's going to be more account types to cater for different types of traders.
Got
Um,
it. Okay. Okay.
so yeah, I think there will be evolutions over time to account for that.
Okay. Um, from the mindset of lowering the leverage, was it that you seen a lot of people get funded and then blow the accounts, or were you seeing that it was a lot of people blowing challenges from the get-go with having the bigger leverage? Like, what was kind of the mindset of lowering the leverage?
Yeah, so we both is the answer. A lot of
Okay.
people were blowing the challenges because of being over leveraged,
Yeah.
and then similarly, when they get funded, people were kind of over leveraging. Um, one of the things, and one of the things that I try and focus on really is okay. The challenge criteria and the account criteria that we have. A lot of people see that criteria as a way of, oh, it's keeping the pass rate low, it's not allowing too many people through. But actually, the way that we think about it is, you know, 95% of trading is psychological. And
Yeah.
so if we can create a challenge environment that's actually challenging,
Yeah.
it's going to shift your mindset. And so the goal of a challenge is actually to get you in the right mindset before you get into a funded account.
Yeah.
And so that's the way that we try and achieve that. Like you say about the consistency rule, 45%, it's still really only 3 days of consistent
It's
trade.
that's what it comes out to. Yeah.
You know,
45 and 10 if you look at it that way. But
yeah.
yeah.
And so if you think about it in that way, you know, we if 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 all you're doing is being consistent for 3 days, how many days can you expect to be funded for? you know?
That
And
makes sense. Yeah.
so I can imagine a scenario, and maybe, again, into the future, maybe that consistency rule on a certain account type goes to 5%. So you need to be 20 days consistent.
Yeah.
Uh,
Okay.
what would that do to the mindset of a trader going into the challenge after being 20 days consistently profitable?
Yeah. Yeah.
Um, so that's kind of the ways that we're thinking, is to say, okay, the rules are not here to limit traders. The rules are here to try and set traders up for success going into
Yeah.
that real live account.
Yeah. Okay. Okay. I have like a group of like I don't want to call them students, but basically I started a group and I have like people who come to me for like trading advice and
Hmm.
my trading style and things of that nature. And a lot of them are looking to pass prop challenges and either get funded for the first time or get their first payouts. Everybody's in so many different stages.
Yeah.
But the point is, a lot of them are like super interested in coming over to Funder Pro, and I've been giving them my affiliate code, but they've been asking like, do you guys offer like any kind of discounts for affiliate codes, whether it's like a 10%, 5%, or something like that, just to because your prices are a little bit higher, and I don't mind paying it because I know what I'm getting in the end. Like to me, I can get a daily payout every day, like that's amazing. But just so for some of those people that are like not a little financially challenged, do you have something like that you offer?
Yeah, yeah. Yeah, for sure we can do it. We can
Okay.
set it up with you.
Okay.
One of the ways that we've actually built our technology, we can apply it onto your code. So if somebody
Okay.
follows your link, it actually just automatically goes into the basket.
That's what I'm thinking. Yeah, something like that. Yeah.
Yeah, yeah. So we can, yeah, for sure. I'll work with the
Okay.
team and get that set up. I can get
Awesome.
like 10% in there.
Oh, appreciate that. Thank you. Thank you. Um, I think that's kind of really it. I'm trying to think of anything else. I was like, I'm gonna write down some questions, but I really wanted it to be more organic. But this is like good stuff. I mean, again, I think I told you that I've been with so many pop firms, and they all give me anxiety except for this one. Like, this is the only one. The only thing with that gives me anxiety, maybe with this one, is like, will this be here forever, or is this just like a figment of my imagination?
Yeah,
Because
yeah,
I
yeah.
really do like the daily payouts, but I also like that you guys don't limit how we trade. Like most prop firms, they'll start
Hmm.
off a certain way with a certain set of rules, and then next week it'll be a new set of rules, and then the week after that it's a new set of rules. Then they're capping the amount that you can get paid out, and it's like all these weird things that to me just screams red flag, right?
Yeah,
Because yes, I know obviously there is if you are eight booking trades, you shouldn't be limiting profit. So it tells me, okay, obviously you're using challenge money. And
yeah,
as this space grows, because I've seen it go from one or two prop firms to probably hundreds now, with it being that much level of competition, what's going to keep you from being the popular prop firm this month? And then people start going to another one, but as you start losing clients, then you can't pay out as much. So that's why, like, I really like your model because you're not depending on
yeah,
um, sign up. In fact, you actually refund me before I even take my first trade on my funded account, which to me is crazy, but it makes a lot of sense, right? It makes sense because your goal isn't to make the money from the sign up, it's to make it from the long term trading profitability. So I have
yeah.
to say, like, your company really changed my mindset of like how I look at fundings because um that model, and I hope more companies start moving away from that model kind of towards your model. But with you guys being the only one out there, like, please don't ever disappear. Like, I think somebody's proper is disappearing. So that's one big
Yeah.
thing.
Yeah. Well, look, I think, and that's like one of the things is the reason we've chosen to go this route,
Mhm.
is because we saw so many prop firms disappearing, and we
Yeah.
just knew that it was like, okay, look, if you set the criteria right, if you get the right traders through the door, the numbers just work out. And
Yeah.
your profits are being paid out from the market, and
Hmm.
as long as we know that we're funding the right amount of people, you know everything continues to run. We can absorb the drawdowns, but obviously as well, we're keeping that 20% of profit that's being made by the traders that are succeeding. So it all
Got it.
goes into just replenishing itself. Yeah, so that's what we focused on, and so you know, I do hope that more of the industry goes our way. Uh, obviously we're here to be a number one platform. That's our goal. We want
Yeah.
to push for it.
Yeah.
We want to do it, but we want to also show other people in the industry this is the right way to do it. And
Yeah.
if you can do it in this model, it's a sustainable business, and you're not just going to make quick money for a year. You're going to have a
Yeah.
long term 10, 20 year company.
Got it. Got it. Got it. Yeah, no, I feel the same way. It's like you start on something, you get used to it, rug pulled, and it's the next one. It became like a whack-a-mole experience. And,
Yeah,
even like for a guy like me who is leaving my main source of income to go to this path, it does get scary because, companies are here, then they're not, and then you're scrambling to find a new situation. Um, so yeah, but I have faith that you guys are going to be around. I can completely see the vision like from here, and I can only imagine what it's going to look like a year or two from now. So happy to partner with you guys for sure.
amazing. Okay, well, look, Alan, thank you so much for the
I
call.
appreciate it.
We really had a great chat, and I think a lot of people will take away a lot of good piece of information for this. And
Mm.
best of luck in this new journey that you're on, and congratulations.
Thank you so much. I appreciate it. Thanks for your time.
Yeah, thank you. All the best now.
All right.
Bye
Have a
bye.
good day.